Oh, hey, didn't see you there. Now, I'm sure you're wondering why I'm hiding in the corner. That's because we've got to mix things up today. You're in for a doozy. The number one frustration I hear from most business owners is the word audit. Now, audits can be kind of scary. We're going to go through and take some time today to break down what an audit is, how it works, and how we can make sure you're taken care of as a business owner. So stay tuned, buckle up, get ready for the ride. Nothing frustrates a business owner more than getting to the end of the year, things are smooth, then boom, they get hit with a surprise audit and owe premium that they weren't expecting. That's what we're going to break down today. How to avoid these surprises and make sure that things are done correctly. In order to make sure that we understand everything, we need to understand how the policies are written. Insurance is based off of exposures. In another video, we discussed what an exposure is. It's the amount of risk or potential for an accident to happen. So in most cases, general liability and workers' compensation policies are rated off of either gross revenue, gross sales, or payroll. Payroll is the most common. What they'll do is the more payroll you have, then the more exposure there is. They will break down different class codes and different classifications. The reason they do this is because somebody that's sitting in an office all day has a less likely chance of being injured or causing damage than someone who's up on a roof or way up high on scaffolding or building a home. You put the payroll under this class code, and the class code will have a rate tied to it. For example, they'll have a class code for plumbing or framing or excavation. Each one of these codes will have a dollar amount. Typically what you'll see is for every $1,000 of payroll, you'll owe that number in premium or insurance on the general liability. On the workers' compensation, it's typically for every $100 of payroll. Now, what happens is the insurance company takes your estimated figures because you don't really know how the year is going to go. You can get a pretty good guess, but at the end of the year, the insurance company just checks to see what actually happened. Here's an example. We have a client that they are an excavation company. They'll dig trenches and lay pipe work and everything for these big home developments. Now, most of the time, that's all they do. They'll sub out some work for their subcontractors. One of those things that they sub out a lot is concrete. In this particular instance, they started doing some concrete pads, some flat work around fire hydrants and things like that. They were not planning on having payroll under that class code because it was something that just came up. Here's a look at what their audit ended up resulting. Now, I know this looks confusing, but I'll break it down for you. They have these different class codes: subcontracted contractors, excavation, and concrete construction. Each one of these has a rate tied to it like I was talking about earlier. What they do is they estimate. So for contractors, it's the total cost, and for excavation or concrete work, it's their estimated payroll. In this instance, payroll on concrete flat work, they estimate $142,000, and it has a rate of $25 for every $1,000 of payroll. When you take down what actually ended up happening, they did not estimate correctly. In fact, they had estimated the number so low that they were only planning on paying $7,058 for this section and $4,379 for the completed operation section. We can talk about that more in another video. At the end of the day, they ended up having an additional premium, which is this section right here, which resulted in over $11,000 in additional cost to the company. At the end of the day, they would have paid that amount anyway, but the audit means they're going to pay it at the end of the year versus spread out throughout the year, like a typical policy is done. We estimate, we break it up. You can do either way, but most people prefer to pay monthly. Let's jump into another example. One of the most common frustrations I see, especially in the contracting space, where you're a general and have several subcontractors underneath you, is not transferring risk properly. What I mean by that is if you have a contractor, let's say a drywaller, who accidentally screws into an electrical cable or a water line and causes damage, whose insurance policy picks that up? Well, if they are insured properly, it should be the subcontractor's policy. What happens is, if you do not have a way to prove that they have insurance, your insurance policy can pick that up. In the insurance world, we have certificates of insurance. It's kind of like a snapshot that shows what type of insurance policy somebody has and when they are active. A general contractor is responsible for collecting those certificates. So when an audit comes by, they can report how much subcontractor costs they had, where all that money went, and they can prove if they had the insurance during that time. If they didn't have that proof of insurance, they are now on the hook for what that payroll would have been as if they were their own employees. So let's take a look at an audit that happened. Now, for simplifying purposes, we've just got the results. I didn't want to go through this thing 17 pages long. But what happened was this home builder had subbed out work for all these different class code descriptions. You can see there's things on here like concrete construction, fence erection, electrical, interior decorators. A big one right here is painting or carpentry, all these different things. What happened is they had estimated $0 in payroll because they were going to be subbing out all of this work. In fact, we had estimated nearly $2.4 million in subcontracted costs, which has a really low rate. Here's the actual exposure. Because they didn't have certificates of insurance, they're on the hook for what they would have paid into these different class codes. As you can see, it's a big difference. And the subcontracted costs are obviously lower because they were counting them as payroll. In this particular incident, this home builder was going to owe over $30,000 in additional premiums. We were able to help them go through, collect certificates, put new risk transfer systems in place, set up processes for future transactions, and simplify the whole process. At the end of the day, we were able to get this audit reduced and prove that they did have insurance coverage during that time and got it down to about $4,000. A big difference from the $30,000 they would have been on the hook for. Now, this doesn't happen every time. It's important that you have risk transfer in place and that you're collecting these certificates of insurance. We can have a whole nother series about what a certificate is, what to look for, how to know if they're insured properly, they have adequate limits, and having a good subcontractor agreement in place. At the end of the day, if you track all these things, you won't be on the hook or be hit with any surprise expenses that you weren't planning for. To simplify things, an audit really isn't a penalty. It's more of a true-up to make sure that you were rated properly. You estimated one thing, and the year turned out differently. Sometimes this goes the opposite way, where you estimated high and had a bad year. In that case, you could be getting a big refund in premium. I see that happen all the time. I understand why audits can be frustrating. Sometimes they're a surprise. If you didn't know you were going to have an audit come up because your insurance agent didn't explain that to you, I've seen that happen. It involves some paperwork, collecting things like 941s and certificates of insurance, and proving where all this money has gone. You want to make sure you have a good bookkeeper and accountant on your side. And at the end of the day, I hope this video helps just a little bit more to make your life a little bit easier. And if you have somebody on your side that you can consult with, they can explain these audits and simplify your life. Thanks for watching.